Hey everyone, welcome back to Corporate Decoder, the place where we unlock the secrets hidden in plain sight within company filings. Today, we're diving into Couchbase's latest report, and let's just say they're serving up some fresh financial data for us to chew on. If you want to stay ahead of the curve and understand what's really going on in the world of business, make sure you're subscribed and join our Discord community linked in the description below. Alright, let's get straight to it. We've got Couchbase Inc. telling us about their performance. They're letting us know how they did in the second quarter of their fiscal year, which ended on July 31st, 2025. The core of this update is a press release they put out on September 3rd, 2025. Think of this announcement like the company's way of saying, here's how we did. Now, they include a bit of a legal disclaimer here, which is pretty standard. They're basically saying that this information, while important, isn't being officially filed in a way that makes them liable for every single detail under certain sections of the law. It's a way to share information without opening themselves up to every possible legal challenge. It's important to understand that often companies use these filings to put out their numbers and their narrative. Let's look at what they're actually trading. Couchbase's common stock with a tiny par value of 0.00000 and or Nasdaq Global Select Market under the symbol base. This tells us where you can find their stock and gives us a general idea of their public presence. So on September 3, 2025, Couchbase announced their second quarter financial results. This is where we get into the meat of their performance. While this specific filing doesn't contain the detailed tables within the main body, it points us to the press release where those numbers would be. Usually in these kinds of reports, the press release contains the key financial highlights. Without those specific numbers here, we have to assume the press release, which is Exhibit 99.1, contains the detailed story of their revenue, profits, and other vital metrics. It's like getting a summary of a book. The book itself contains all the details. The press release is the key here. It's what they use to communicate their earnings. Imagine it like this. The company is on stage, and this press release is their speech about how they've been doing financially. Couchbase is incorporated in Delaware, which is a very common state for companies to choose for their legal structure due to its business-friendly laws. Their file number with the SEC is 001400601. This is just an internal identifier for the SEC to keep track of their filings. And their IRS employee identification number, which is like a social security number for businesses, is 26357697. Their main office is located at 3155 Olson Drive in San Jose, California, which is right in the heart of Silicon Valley. That's a strong signal about their industry and ambition. If you needed to call them, their main phone number is 650-417-7510. Now, looking at this report, we see that Couchbase announced their second quarter financial results. While the exact numbers aren't within this initial document, the filing confirms that the press release containing these results is available as Exhibit 99.1. Typically, these press releases will highlight key figures like revenue growth, profitability, and any significant changes in their operational performance. If we were to imagine what was in that press release, we might expect to see details about their revenue growth. For instance, if their revenue grew by, say, 15%, that means for every $10 they made last year, they're now bringing in $11.50. That extra $1.50 could be reinvested into the company, used to pay down debt, or distributed to shareholders. On the flip side, if their revenue dropped by 5%, it means they are losing $1 out of every $20 they used to earn. This could be due to increased competition, a changing market, or issues with their products or services. Profitability is another big one. If their net income increased by 20%, it means they kept more of every dollar they earned after all expenses. This could signal efficient operations or successful cost-cutting measures. A 10% drop in net income would mean they are keeping less profit, which could be a sign of rising costs, price pressures, or a need to invest more heavily in their business, which might impact short-term profits for long-term gain. Factoring in their business, which might impact short-term profits for long-term gain. We'd also look for metrics related to their customer base. For example, if they reported retaining 90% of their customers, it means for every 100 customers they had at the start of the quarter, they kept 90. This is a strong indicator of customer satisfaction and the value proposition of their product. However, if that number dropped to 80%, it means they lost 1 in 5 customers, which is a significant churn and would be a red flag for the business's health and future growth prospects. In the world of tech companies like Couchbase, which offers a NoSQL database, growth and customer acquisition are often key indicators of success. Investors want to see that the company is expanding its reach and that its technology is in demand. So a strong revenue increase and a growing customer base would be positive signs. Conversely, declining revenue or customer churn could suggest they're struggling to keep up with competitors' offer or facing market headwinds. Warren Buffett famously looks for companies with a strong competitive advantage, often called an economic moat. For Couchbase, this moat might come from the unique features of their database, their customer loyalty, or the network effects of their platform. We'd be looking for numbers that suggest this moat is widening, not shrinking. Let's consider the implications. Strong financial results often translate into higher stock prices, making investors happy and potentially allowing the company to raise more capital for future growth. Poor results, on the other hand, can lead to a falling stock price, investor skepticism, and difficulties in financing new projects. It's a constant balancing act. This filing, by referencing the press release, is essentially pointing us to the company's own narrative of its performance. It's crucial to then dig into that press release and the accompanying financial statements to see if the numbers truly support the story they're telling. Are they emphasizing revenue growth while their profit margins are shrinking? Are they boasting about customer is declining? These are the kinds of questions we need to ask to get a true understanding of the company's health. And finally, we have the signature section. This is where the company officially confirms that they've reviewed the report and that it's accurate to the best of their knowledge. Here we see the signature of Bill Carey, who is signing on behalf of Couchbase. His title is Interim Chief Financial Officer and Chief Accounting Officer. This tells us he's a key financial executive responsible for ensuring the accuracy and integrity of the company's financial reporting. His signature lends authority to the document. The date of the signature is September 3, 2025, aligning with the date of the press release mentioned earlier. Now, looking at Couchbase's position, they operate in a highly competitive database market. Their success hinges on their ability to offer a database solution that is not only technically superior, but also cost-effective and easy for businesses to implement and manage. They are up against giants like Oracle, Microsoft SQL Server, and other NoSQL players like MongoDB and Amazon DynamoDB. The story in their financial results would tell us if they are gaining market share or losing ground. A strong performance would indicate they are effectively competing and providing a compelling offering. Conversely, weaker results might suggest challenges in differentiation or market penetration. One of the key risks for a company like Couchbase could be technological obsolescence. The database landscape is constantly evolving, and if they don't keep pace with innovation, their product could become outdated. Another risk is execution risk. Even with a great product, a company can fail if it doesn't manage its sales, marketing, and operations effectively. Investor sentiment is also a significant factor. If the market believes in their growth story, the stock price will likely reflect that. If doubts creep in, the stock can suffer regardless of the underlying business performance. In conclusion, this Form 8K filing is essentially a notification and a pointer to Couchbase's latest financial performance information, primarily shared through a press release. Without the detailed numbers from that press release, it's hard to give a precise assessment of their financial health. However, understanding that these reports contain the crucial data points for investors to analyze is key. If their financials show strong revenue growth, increased profitability, and a growing customer base or significant customer retention, then it signals a healthy company in a competitive market. If not, it might indicate they are facing challenges. What's your take on these kinds of filings and what they can tell us even without immediate numbers? Can you guess what Couchbase's latest results might look like? Let us know your thoughts in the comments below. If you found this breakdown helpful, give us a thumbs up and subscribe for more in-depth corporate insights. And don't forget to join our Discord community for more discussions. Thanks for watching, and we'll see you in the next video.